Hello. Today we're talking about Skechers, the market leader in athletic footwear with a growth potential of 48.3%. Skechers USA manufactures and sells sports shoes for men, women, and children worldwide. The company operates in three segments: domestic wholesale, international wholesale, and direct-to-consumer. Skechers is the third sports shoe brand in the world in terms of revenue after Nike and Adidas. Skechers is among the most manufacturers of sports shoes, second only to global giants such as Nike, Adidas, and Puma. Skechers will thrive even in an economic downturn, as the company's footwear is predominantly utilitarian in nature. The potential for revenue growth remains, as the company has more than 100 branded shops in only two countries, the US and China, and its own online platform is so far only operating in the US. The share of DTC sales in total revenue has grown from 25% to 40% in the last 3 years and is likely to continue to grow. DTC sales have higher margins, which could lead to an improvement in the company's profitability. Reason 1. Market opportunities. According to Statista, the global athletic footwear market is valued at $72.7 billion and is expected to grow at a compound annual growth rate, CAGR, of 6.25% through 2026. The main contributor to this growth will be Asia-Pacific at a compound annual growth rate of 8.1%, driven by increasing disposable income. There are a number of studies indicating a shift in consumer preferences in favor of leisure sports. For example, according to a study by Fortune Business Insights, the industry will be dominated by consumers who engage in recreational sports, for whom sport is a leisure activity rather than a competition. Thus, the growing leisure sports market is an important factor for Skechers' growth because, unlike its main competitors Nike and Adidas, the company has less of an emphasis on professional sports and is geared towards an audience of amateurs and comfort seekers. Reason 2. Strong positioning. Skechers has a strong competitive positioning. The company's shoes are durable and of high quality, but they are cheaper than most competitors. According to Run Repeat research, Skechers has the lowest average price with the highest consumer ratings, demonstrating the best value for money on the market. According to Comparably, Skechers is one of the most manufacturers of sports shoes and is second only to global giants such as Nike, Adidas, and Puma, which is expected as these firms actively collaborate with the world's best athletes. Skechers' high position in the recognition ranking is due to a better price-performance ratio as well as a significant focus on consumer comfort. Skechers' solid competitive positioning is also reflected in its strong marketing performance. According to the latest annual reports, Skechers generates $13.70 in revenue per $1 of sales and marketing spend, while Nike and Adidas stand at $12.10 and $8.30 respectively. Reason 3. Resilience to recession. One of the main threats facing the economy and the stock market today is the looming recession. However, Skechers has a high degree of resilience to the decline in consumer spending. Skechers footwear is predominantly utilitarian in nature. The company offers shoes for everyday wear, unlike other brands that concentrate on high-performance sports equipment. During a recession, consumers may put off buying clothing, accessories, and specialist footwear, but they are unlikely to give up new casual footwear if the old one already worn out. Also, during recessions, consumers tend to switch from expensive brands to cheaper alternatives, allowing Skechers to take some customers away from its more expensive competitors. Thus, Skechers will thrive even in an economic downturn. Remarkably, the company was able to keep revenue at a comparable level even during the 2008 to 2009 recession. The company's financial results in recent years can be summarized as follows: sustained double-digit revenue growth rate over the years except for 2020, down 12% due to lockdowns. For 2021, revenue grew 36.8% year-on-year, from $4,613 to $6,310. Gross margin growth as the business expands and economies of scale are realized. Gross margin increased by 1.7 percentage points from 47.81% to 49.51% at the end of 2021. Stable operating margins. In 2021, the operating margin increased by 6.58 percentage points, from 2.9% to 9.48%. Sustained net profit margin. At the end of the year, the indicator increased by 9.61 percentage points, from 2.14% to 11.75%. Revenue rose 12.4% year-on-year, from $1,661.90 to $1,867.8 million. Gross profit increased by 5.15% year-on-year, from $853.6 million to $897.6 million. Gross margin declined from 51.36% to 48.06% due to inflationary factors, including higher material, logistics, and labor costs. Operating profit decreased by 23.36%, from $201.2 million to $154.2 million. Operating margin decreased from 12.11% to 8.25%, driven by lower gross margins. Operating expenses as a percentage of revenues increased marginally from 39.3% to 39.8%. Net profit decreased 34.21%, from $137.4 million to $90.4 million. Net margin decreased from 8.27% to 4.84%, also due to the impact of cost of sales and gross margin. Skechers has a healthy balance sheet, with total debt of $1,599 or 24% of total assets, cash equivalents, and short-term investments accounting for $857 million and net debt of $742.2 million. The minimum price target from investment banks set by Cowen is $37 per share. Evercore values Skechers at $60. The consensus is that the fair market value of the stock is $51 per share, suggesting a 48.25% upside. Skechers has a healthy balance sheet, with total debt of $1,599 or 24% of total assets, cash equivalents, and short-term investments accounting for $857 million and net debt of $742.2 million. The minimum price target from investment banks set by Cowen is $37 per share. Evercore values Skechers at $60. The consensus is that the fair market value of the stock is $51 per share, suggesting a 48.25% upside. Buy shares at a price of $34.40. Allocate no more than 2% of your portfolio for purchase. Sell when the price reaches $51. Thanks for watching this video. Please like and subscribe, more interesting invest ideas will be waiting for you. Bye.